3 charges of fraud were indicted against Trevor Milton, the founder and former executive chairman of Nikola Corp, after a federal grand jury decided that he had lied to investors about the company's operations. He also faces fraud accusations for civil securities from the Securities and Exchange Commission. Investors, automobile fans, and the media have long questioned Nikola's ability to deliver vehicles on time, and the company's progress has been criticized for this. In today's video, we will discuss what led Nikola Motors to their doom and how Lucid is totally different from Nikola Motors. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar videos. Comments are loved and featured in upcoming videos. Nikola Motor Company was created by Milton in 2014 with a $2 million investment from a metals manufacturing company. In June 2020, Nikola went public by merging with the Blank Check Corporation and ended its first trade day with an estimated value of more than $28 billion. The transaction that propelled Milton to overnight billionaire status. When the company's shares reached around $80 a share, it had a market valuation higher than Ford Motors, despite the fact it was not generating any significant revenue. Prosecutors have charged Nikola co-founder and former chairman Trevor Milton with making fraudulent representations to investors in the electric vehicle firm. The allegations follow a rough year for the corporation. Right after its merger, it faced questions regarding its production and technology. CEO's backgrounds. Milton founded St. George Security and Alarm, which sells security and alarm equipment, and ended up selling the company. Milton then attempted to sell used automobiles through an online classifieds website, but his venture was ultimately unsuccessful. Following that, Milton formed D-Hybrid Inc., which specializes in alternative energy vehicles. Milton, D-Hybrid Inc., filed a lawsuit against its own investors and shut down the company, claiming that investors were stealing intellectual property. Milton had a poor track record, which is particularly important when trying to get into the electric vehicle sector, where you need a really solid track record in order to attract long-term investors and institutional investors to the table. Lucid, on the other hand, is led by a CEO who is both charismatic and extremely effective in his approach, Peter Rawlinson. Prior to joining Lucid, Rawlinson worked as vice president of vehicle engineering at Tesla, where he was also the chief engineer for the Model S. A number of other Tesla veterans work for Lucid as well. Peter achieved a great deal of success in the Tesla company, and it is exactly what he took to Lucid. Nikola's CEO, on the other hand, has been charged with fraud, and there's quite a bit of a difference between the two. Nikola Motors Collapse. Days after the startup's shares debuted, Bloomberg News reported that Milton had exaggerated the capability of the company's debut truck, the Nikola One. That story got the attention of an activist investor at Hindenburg Research, which published a detailed report in September 2020 accusing Milton and Nikola of deceiving investors. One of the allegations made by Hindenburg is that Nikola staged a video about its hydrogen fuel cell semi-truck in its Nikola One in Motion video. Another allegation refutes Nikola's claims that it would, quote, revolutionize the battery industry via an acquisition. That acquisition deal fell through when investors realized the technology was only vaporware. Instead of attempting to debunk the claims, Nikola claimed that Hindenburg Research had misconstrued the truth. The company's refutation states that, quote, Nikola never explicitly stated that its well-known prototype was powered by inverters or other fundamental components manufactured by the company. Despite Nikola's claims, the semi-truck in the video did not move by itself. Nikola has already established a hydrogen storage and dispensing station at its headquarters, proving that its planned hydrogen refueling network is being created, end quote. Despite this, nothing in Nikola's news release seems to disprove Hindenburg's allegations. However, even though the electric vehicle firm never claimed to have a functional prototype constructed entirely from in-house components, many of its investors appeared to believe that they did, and the company did not appear to be making any serious efforts to address any misconceptions about its capabilities. Following the public disclosure of the claims, investors withdrew their investment from the firm. To make matters worse, Nikola CEO Trevor Milton quit on September 20th, 2020, less than 2 weeks after the article was published, by making statements that he left for personal reasons. Prosecutors in New York charged Milton with deceiving investors from November 2019 to September 2020. After pleading not guilty, he willingly surrendered to federal detention and was released on a $100 million bail by a judge. Due to the consequences from the claims, Nikola has been compelled to scale back its plans. The breakdown of an agreement with General Motors to construct a pickup vehicle, as well as the cancellation of an electric garbage truck program with Republic Services Inc., Nikola's market capitalization has plummeted from about $29 billion in June of 2020 to just $4.5 billion as of August 2021. How Lucid is different. Neither of these firms had sold any automobiles, and both of them entered the stock market not through traditional avenues, but through the controversial method known as the Special Purpose Acquisition Company, or SPAC. And both of them saw their stock prices skyrocket during the epidemic. That is where the similarities end. Nikola hit a brick wall, while Lucid flourished. Lucid is following in the footsteps of the world's largest electric vehicle manufacturer, Tesla. You may point to Lucid as a safer investment when compared to Nikola. The luxury electric vehicle, sedan, and SUV company is supported by heavyweights like the Public Investor Fund's PIF, something that the Nikola company lacked. Which is to be expected, to be fair. These institutional investors are well versed in identifying a company's potential when they see it. Sure, Lucid has pre-orders whose deliveries have yet to begin. Nikola, on the other hand, did not even have a prototype to showcase. The only prototype they had was a pusher, not a drivable prototype, which was most likely to entice investors to buy the misleading news. While Lucid, on the other hand, is extremely transparent when it comes to their prototypes. A number of tests have been performed on these prototypes, and they're even closer to being delivered than they were previously. In addition to crash testing and EPA testing being nearly completed, there are other factors such as a Lucid confirmation email and final testing on public roads. This puts Lucid poised in a much better position than its predecessor, Nikola, which was, if one wants to be precise, a firm just on paper. After you're finished watching this one, you may want to check out our previous video. Lucid Motors deliveries are getting closer and closer if you want to stay up to date on the newest news regarding Lucid closing on deliveries. That would be the first link in the description. The conclusion. Despite the fact that Nikola's pickup truck plans were canceled after it was discovered to be a possible fraud, the company is still managing to stay afloat with its other commercial concepts, such as a hydrogen electric semi-truck that runs on water. However, the company suffered a significant setback with the loss of its Badger hydroelectric pickup truck. General Motors withdrew from a key transaction, and the stock hit rock bottom. The last couple of years have been banner years for electric automobiles. Tesla's stock has risen dramatically. Legacy automakers like GM, Toyota, BMW, Nissan, and even luxury brand Bentley have all promised new electric cars. Startups like Lucid Motors stepped up the competition by unveiling their top-of-the-line Long Ranger Lucid Air sedans. However, there were some flops. For other EV manufacturers, the pandemic caused plant closures and job losses. Many EVs were delayed in arrival or debut. Others were found to overpromise and underdeliver. Needless to say, one should thoroughly research before hopping onto a trend in the investment market. According to Will Rill, the company's capital expenditure should not be a concern after receiving funding from the Saudi Arabian Public Investment Fund. What are your thoughts on the matter? Do you guys agree with Will Rill's point of view? Let us know in the comments section. That should wrap things up for today. Keep in mind, subscribing's still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.